Welcome to the April 12th, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Asset Management, based here at the Crescent in Dallas, and this is your weekly financial tour of the global markets, a fast-paced tour. I am your financial weatherman, and we are going to go top down, but today we're going to start with the economy. We usually start with markets year to date, but what I wanted to show you is answering the question, when is the U.S. economy truly recovered from the pandemic? So let's start with the number of people that actually have jobs. This is the important figure if you look at the overall United States well-being. Nearly 159 million people were employed before the pandemic. 26 million lost their jobs tragically and almost instantly. It was the first time we had seen that in history. And here, 133 million, now 151 million. So there's 8 million more jobs to be restored before we declare all clear. Where are we in that process of everybody that wants a job, has a job, and we reach a record? In this case, the job openings are the key figure. What we looked at before is total employment, including agriculture, and here we've got job openings by industry. Now, you can see the low right here, the figure nearly chopped in half, and then this week we reached nearly 7.4 million jobs available. Those are help wanted signs online and otherwise measured by the Fed. Look at this, 7.6 million was essentially the high in the number of jobs out there, and we are near the high. What was the good news last month? Almost 1 million people found jobs, net new jobs added over 900,000. Wow, at that pace, we would be recovered somewhere in early 2022. So the effects of the stimulus combined with the PPP loans helping small businesses and some businesses that shouldn't have been helped, but helping everybody that needed help at the time, very effective at restoring the jobs market. And the Fed expanding the money supply, probably the right thing to do. Now we look at another measure of full recovery. Last year, the economy contracted by less than 4%. This year, the projections are that the economy will grow by over 4%, meaning restoration of a bigger economy than we had before the pandemic is somewhere at the end of 21, early 22, and the jobs recovery likely early 22. And we get a couple of quarters where we're comparing against the shutdown quarters. GDP growth will come in at 7%. It sounds huge, but it's actually not that tremendous compared to the fact that everybody was shut down. So great progress there. When are earnings recovered for U.S. corporations? U.S. corporations did generally a good job of managing the pandemic. Here's an interesting figure. Back in 2018, $40 per quarter per S&P unit, Standard & Poor's 500 companies, after-tax earnings. When do we recover to record earnings, which is a good valuation for the overall market? At least it used to be till everybody went crazy on trading for a while, but we know how that turns out. Now, look at this. Somewhere around the third quarter, maybe the fourth quarter, we exceed the prior record from 2018. That's 3 years of flat earnings. Yet, when you look at where the Dow is and the S&P, it may have over-anticipated this, and that means a potential range-bound market. But that's the earnings recovery, also on a trajectory for late this year to reach a record. Notice a nice recovery here as we announce the first quarter earnings that's coming out. This is the Dow year to date. Is 33,600 too much, too fast? Well, it is good news, but it also says, well, wait a second, have we already built in a full recovery and it could be a year early by the measures we just looked at. So where do we go? Well, let's take a look at some other measures. What's working right now? This crazy set of colorful graphs tells you what parts of the S&P 500 are doing the best. Well, at the top of the list, energy is up about 30% for the year, and it was last year's stepchild as they anticipated a near depression for the long term, plus the entire movement against fossil fuels. But this year, up 30%. Now, understanding what happened to the banking system, fear of defaults, but massive Fed infusions prevented lots of defaults by providing capital. Now, there is a consequence, which could be future inflation. That relates to energy infrastructure, hard assets. We're going to talk more about real estate as the year goes on. But look at this. Financials up nearly 20% for the year. The banking recovery. There's not going to be as many defaults as they had reserved for, and at the same time, they get a better interest rate spread. There is restored demand for capital, which means borrowing by corporations and others. West Texas Intermediate crude, the low, minus $40 per barrel. You could fill your swimming pool and get about 20 grand by one calculation. And now oil has hit a high of almost 68. It's a range-bound market. You can see that right here, somewhere around 60 bucks, range-bound for a while until recovery restores the rest of demand, likely Q3, Q4. Now, this is business development companies. Wow. Providing capital for companies. Think of a private bank, not a bank like Bank of America or Wells Fargo, but more like a Carlyle Group or a Kohlberg Kravis. They're in this index too. But look at this. The business development companies, they have to pay us a dividend, which is good. And one of our holdings is a business development company, not a recommendation until you actually get a plan by coming down to the Crescent or setting your Zoom appointment, and we'll update your plan. Just go to networthradio.com where the long play program is, and also you can download the podcast on Apple Podcasts. Type in Net Worth Radio and it'll come right up, and you get it commercial free. Now look at this business development company index. Wow, the depths of despair back there, and it is the better part of a double right now. If you add in dividends, it's actually a double. The dividends are paid from what they actually make, providing capital for companies, both debt and equity. Interesting high dividend category when money market rates are near zero. Now this one's just for fun. New York legalized marijuana. You can actually smoke it in the street, from one story, what they said. So this is the pot index, okay? So you had the marijuana index go to this fabulous high, right? Anticipating legalization, and guess what happened? Boom. Well, it loses about a third of its value because legalization is not passed yet. There had been a big boom. This one is just the 1 year, but there had been a big boom back there. Everybody got excited about the pot stocks, and it had a collapse, had a trajectory down here. This was September of 2020, and then a big increase of nearly threefold. It settled back down. But the legalization is a curious subject. Lots of investors interested in it. Some of them don't want it in the portfolio at all for a variety of virtuous reasons. But what we'll say about this is notice the volatility, right? These companies, most of them haven't made money yet. And this trade was obviously based upon an entire legalization. So, thank you for tuning in. Be sure to download the Apple Podcast, and you get the commercial-free version. You go Apple Podcast, McGowan Group, or Net Worth Radio. And of course, YouTube McGowan Group. You can subscribe, and that way, when we have breaking news, you get the update. Be sure to set your time to come down. Meet the team that cares, a team of 9 devoted to your success each and every week. and here you have the evidence. I'm Spencer McGowan, President, McGowan Group. Thank you for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast, and that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.